Well, good morning, everybody. I'm Mark Huxley, and I'm going to be navigating us today through another of the Knowledge Mile 695th Lord Mayor's lectures. On this occasion, Connecting Creativity, the Evolution of Innovation in Insurance, from Lloyd's Coffee House to Lloyd's Lab. So a little bit of background about the topic. Since its founding in 1688 at Edward Lloyd's Coffee House, the globally unique Lloyd's insurance market has sat at the forefront of innovation, much unchanged from its founding, with high net wealth individuals, so-called names, and syndicated underwriting ventures until 1992, when time, history, and perhaps outdated practices brought about its near fatal experience. A new structure emerged, Phoenix from the flames, driven by institutional capital, and now at a wholly new scale. Nestling within the building is the Lloyd's Lab, a new hub of innovation, and that's what we're going to hear about today. So before we get underway, a quick rundown of how the session is going to run. I'm going to properly introduce our speaker, Rosie Dene, in a moment, after which she'll speak to us for around about 20 minutes or so, giving us lots of time for questions at the end of it. To which point, on the top right of your screen, you'll see there's a call out box with a question mark in it. Please put your questions in there. Please don't put them in the chat, and definitely don't put your hands up because we'll miss them and you won't get to ask all of the great insightful stuff to Rosie that you want to put in there. We'll get through as many of the questions as we can. Sometimes it's a little overwhelming with the amount of them that come through, but have no fear. All of your questions, all of your details are going to be shared with Rosie at the end of it, so she can kind of reach out to you separately and respond to anything we don't get through today. You'll know the session's been recorded and it's hosted on our dedicated YouTube channel, so you can rewatch it and of course share it with others. So welcome, Rosie. Thank you for joining us. I'll just give a little brief bio for the benefit of the people dialing in. Now, I didn't write these words. Rosie Dene is a dynamic force within the Lloyd's market, so you've got a lot to live up to this morning, Rosie. We look for all of that dynamism. She joined it in August 2020, been at the forefront of driving strategic initiatives to advance innovation and accelerate transformation within the industry. Visionary leader of the Lloyd's Lab, Rosie has propelled it to international acclaim, positioned it as a pioneer insurtech accelerator. Under her guidance, the Open Innovation Programme recently launched its 13th cohort, with a comprehensive role that spans from engaging with prospective insurtechs and insurers to meticulously planning and executing the 10-week programme. Rose is dedicated to pushing the boundaries and fostering collaboration within the Lloyd's market. Her leadership has facilitated the launch of numerous groundbreaking insurance products, catalysing change and driving innovation forward. An esteemed international conference speaker, Rose's insights and expertise are sought after on a global scale. On a very personal note, and just to declare my own conflict today, I can attest to all of her skills because, being a Lloyd's veteran myself, much of it as an innovator entrepreneur, I now support her work as a mentor in the lab, which is actually where I get to live on a day-to-day basis. So I get to see a lot of stuff firsthand that Rosie does. So that's more than enough from me, Rosie. Over to you, and I will see you in about 20 minutes.
Mark, thank you. Yeah, just like to say that he is a fantastic mentor and he kind of sees what we do on a day in, day out basis. So if you also want to ask Mark any questions, please feel free to. But anyway, hello and everyone here. Thank you so much for joining. So today we are embarking on quite an ambitious journey. We will be tracing the thread of innovation from the birth of insurance in the 1600s all the way to how we're shaping the industry's future. Our goal today? To see how centuries-old ideas are helping us to future-proof insurance for tomorrow. Next slide. So I'd like to start with a simple question. Lucas, sorry, next slide. Thank you. Yeah, I'd like to start with a really simple question today. When were you last in a coffee shop? I'm guessing for most of you, this is going to be a really recent memory. Popping in to grab a flat white, queuing up to be greeted by a barista, and looking around at all of the digital nomads hard at work on their MacBooks. Now, what if I told you that amid the whir of the coffee grinder and the clatter of the laptop keys, a conversation was taking place that would change the course of economic history. It seems completely bonkers, right? Well, it's actually in such an environment back in 1688 on Tower Street here in the city that the insurance industry came to exist. If you had been a patron back then of Edward Lloyd's coffee house, you would have expected more than just your caffeine fix. Alongside your coffee, you'd been served a blend of risk pooling, information sharing, and a hearty side of lively debate. Among London gossip and boisterous auctioneering, you would have picked up snippets of conversations such like, "Did you hear about that ship that sank off the coast of Barbados? I'm looking for someone to insure my next voyage to the East Indies. What's the going coverage for piracy these days?" Welcome to the inception of Lloyd's of London, the global marketplace for insurance, and this marks the start of an incredibly long journey. What makes Lloyd's truly unique is not just its origin as a coffee house, but the way it has evolved from this humble beginning. Over time, Lloyd's developed into a collection of micro businesses operating under one roof, backed by syndicated capital, a simple financial setup where a group of insurers come together to pool their resources to underwrite large risks, which one single stakeholder simply couldn't handle alone. This structure fostered a deeply rooted entrepreneurial culture, bringing together a diverse group of innovative minds. This entrepreneurial spirit became the hallmark of Lloyd's, enabling it to invent solutions to big world problems. The ability to gather varied expertise and perspectives in one place, combined with the flexibility of its structure, meant that Lloyd's could respond quickly and creatively to new challenges. Fast forward to today, and we find ourselves in a very different world, but it's one in which the spirit of Edward Lloyd's coffee house is still alive and well. The clinking of coffee cups have been replaced by the tapping of keyboards, and instead of quills and parchments, we have algorithms and blockchain. But the essence remains the same. At the heart of Lloyd's is people coming together to share ideas, assess risk, and innovate. And it's that last word, innovate, that provides the pulse. But that's exactly what happened in 1688 and continues to happen today. Innovation, a solution reached by enlightened individuals, collaborating and out-of-the-box thinking, leading to future-forward leaps for the insurance industry. And that brings us to today and why we are here. By way of introduction, I'm Rosie Tenay, and I have the privilege of heading up innovation at Lloyd's, where for the last few years I have been running the Lloyd's Lab. The lab is our modern-day Edward Lloyd's coffee house, where we seek to keep that flame of innovation burning strong. Today, I'm going to take you on a journey from those humble beginnings in Tower Street to our iconic building on Lime Street, and into the future of insurance innovation. We'll delve into the modern day embodiment of Lloyd's innovative spirit, the Lloyd's Lab, and discover how we're connecting bright minds from all over the world and nurturing bold ideas that will shape the future of insurance. But more than that, we will uncover a timeless truth, that innovation thrives in spaces where people can connect, collaborate, and challenge the status quo. Whether it's a 17th century coffee house or a 21st century innovation lab, these third spaces, neither home nor the traditional workplace, are the crucibles where groundbreaking ideas are born. Next slide, please. So now that we've witnessed the birth of the modern insurance industry within the humble confines of Edward Lloyd's coffee house, let's explore why these spaces were so crucial to innovation and how the legacy continues today. The concept of a third space is really simple yet powerful. If your home is the first space and your workplace is the second, the third space is simply somewhere in between, a neutral ground where people from all walks of life can gather, connect, and exchange ideas, stripped bare of the cognitive limitations and psychological hindrances that we may fall foul of at home or work. In the 17th and 18th centuries, coffee houses were the quintessential third spaces. They were great social levelers, inclusive and creative environments where anyone could enter simply for the price of a cup of coffee. It didn't matter if you were a merchant, a scholar, a lawyer, or a sailor. In a coffee house, all were equal. But what is it about these spaces that make them such potent catalysts for innovation? Well, let's break it down. Firstly, you have diversity of thought. When people from different backgrounds and disciplines come together, to put it simply, magic happens. The collision of diverse perspectives leads to breakthrough ideas. Secondly, it's neutral ground. Away from the decorum and expectations of the formal workplace, social hierarchies fade into the background, and people feel free to express unconventional ideas. Thirdly, serendipitous encounters. In a third space, you never know who you might meet or ultimately what conversation you may overhear. These chance encounters can spark new collaborations and challenge de facto modes of thought. Fourthly, an escape from the routine. Stepping out of our usual environments help us break free from established patterns of thinking. The brain loves novelty of experience and in turn rewards us with novelty of thought. But lastly, and ultimately, an information exchange. Third spaces act as informal information hubs where news and ideas spread rapidly. So fast forward to today, and you might think the era of coffee houses is long gone. Now that the norm tends to be faces buried in laptop screens instead of facing each other in conversation. But I'd argue that the spirit of the third space is very much alive, it's just evolved. Today's third spaces might look different. They're co-working spaces, innovation labs, and yes, even on occasion, a coffee house or a cafe. But they all serve the same fundamental purpose, bringing people together to exchange ideas and spark innovation. At Lloyd's, we've taken this concept to heart. Our trading floors, where brokers and underwriters meet face-to-face to negotiate complex risk, is a modern-day and amplified incarnation of Edward Lloyd's original coffee house. It's a space where information flows freely, relationships are built, and innovative solutions are born. And then there's the Lloyd's Lab, which I have the privilege of overseeing. The lab is our dedicated innovation space, launched in 2018, with an aim to recreate that hot coffee house atmosphere of collaboration and creativity. Here in the lab, we bring together insurtechs and startups, underwriters and brokers, and experts from across the insurance industry and beyond. Put it simply, our aim is to bring the brightest and most forward-thinking minds together in the hope that they might strike innovation gold. Every 6 months, we review some 250 applications to select just 10 promising ventures. The chosen few have a unique opportunity to collaborate with the world's largest insurance market and to revolutionize the way business is conducted. Next slide. So let's step into our modern day version of Edward Lloyd's coffee house, or to put it more aptly, our third space for innovation. Since its inception in 2018, the Lloyd's Lab has become a powerhouse of innovation in the insurance industry. We've hosted 12 cohorts, welcomed over 130 startups, and seen an incredible 97% success rate. But to us, what does success look like? Well, 85% of the companies that have come through our doors have gone on to form commercial relationships within the Lloyd's market. That's not just a stat, it's a testament to the power of bringing together diverse minds in a collaborative space, as well as the undeniable evidence that the thirst for innovation within the broader market is alive and well. The insurance industry occasionally gets attacked for having what outsiders perceive as a stuffy and outdated way of doing business. We would very much argue the contrary, and we have the stats to back up that argument. Without a serious appetite for innovation from the market, we wouldn't have been able to hit the highs that we have in our short but stratospheric rise to our current position as one of the FT's leading global accelerator programs. But ultimately, what sets the lab apart is our unparalleled access to a vast pool of expertise and diverse risk appetites, courtesy to the backing of 100 syndicates and over 300 brokers from within our market. This means that unlike other accelerators, which rely on a sole area of expertise and only serve a narrow segment of their chosen markets, the Lloyd's Lab can offer a much more broader range of perspectives and opportunities. The influence of the Lloyd's Lab extends beyond our alumni's individual successes to the transformative impact that we are having together on the world of insurance. Collectively, our alumni have raised over $1 billion in funding since participating in the lab. They've created over 1,000 jobs and are developing products and services that are reshaping the insurance landscape, making it more responsive, more inclusive, and better equipped to handle the challenges of the 21st century. But let me bring this to life with a couple of stories. One of our alumni, Gaia, came to us with a really simple mission, which was to make fertility treatments more accessible. They developed a new type of insurance product for IVF treatments, born from the founder's own experience with the financial and emotional toll of fertility struggles. Through the lab, Gaia was able to transform their consumer product into a fully fledged insurance offering. 2 years on, and they've helped bring 100 babies into the world. That's 100 families whose lives have been changed. And then there's Flood Flash, another success from the lab. They've revolutionized flood insurance with a parametric product that uses smart sensors to detect flood levels and trigger automatic payouts. In a world increasingly impacted by climate change, innovation is crucial. Just glance across the Atlantic at the destruction caused by Hurricane Helene for a sobering reminder of this growing challenge. Flood Flash's solution means that most UK claims can be paid within 48 hours. This is game-changing for businesses and communities at risk of flooding. Their parametric solution also reduces the cost and increases the accessibility to coverage for individuals and businesses in high-risk areas, meaning those who traditionally struggle to get insurance can now get insurance. These are just two examples of the over 130 companies that have come through our doors at the lab. Each one has a unique story, molded by exceptional people, and all share a common thread. They've benefited from the collaborative, innovative environment that the lab provides as a modern-day third space, just as the early insurers benefited from that bustling atmosphere of Edward Lloyd's coffee house. Next slide, please. So how does the lab actually work within the context of third spaces? Let me take you through our process, and hopefully you'll see, just like a stick of Brighton rock, if you cut through the lab program at any given point, you will find innovation running straight through it. The Lloyd's Lab operates an accelerator program running multiple cohorts a year. We start by casting a really wide net, inviting applications from insurtechs and startups around the world. And that's the great leveler. Anyone can apply and expect equal consideration and treatment. Our selection process is rigorous and market-driven. From around 200 applicants, we select a small group to join each cohort. We assess applications based on 3 key criteria: the product, the team, and their plan for working alongside the Lloyd's market. The top 20 applicants are invited to a pitch day, where they present to an audience of market leaders, potential mentors, and the Lloyd's Lab team. This ensures that the final cohort is selected by the market itself, aligning with their interests and expertise. And that's the collaborative nature of insurance that has been ever present since 1688. Once in the lab, these startups embark on a 10-week journey of intense collaboration and development. We pair each startup with mentors from across the Lloyd's market, experienced underwriters, brokers, and other industry experts who all provide invaluable insights and guidance. But it's not just about the startups learning from Lloyd's. It really is a two-way street, with each of the startup bringing a fresh perspective and understanding of cutting-edge technologies that challenge our traditional ways of thinking. This cross-pollination of ideas is really where the magic happens. That's the exchange of ideas on neutral ground, and it's within these relationships that ideas spark to life and burn brightly, each one a potential revolutionary product waiting to be born. In recent cohorts, we've introduced regional themes, focusing on solutions to address specific challenges in different parts of the world. From Europe to APAC, the Americas to the Middle East and Africa, we're really committed to fostering innovation that responds to diverse global needs. And more than ever, it's this diversity of thought and viewpoint that the industry needs. A full range of multicultural voices with contrasting perspectives, shaping products and services for a truly global marketplace. And that global focus is crucial for insurance, because at its core, insurance is about understanding and mitigating risks. And those risks vary really, really hugely across all different regions and cultures. Last slide, please. So we wouldn't actually be a true innovation hub ourselves if we weren't constantly striving to improve and expand our own offering. To further support our endeavours and to aim even higher, we've introduced several initiatives over the years. Firstly, Lloyd's Product Launchpad. This is a group of underwriters from across the market purely providing insurance capacity to develop innovative underwriting opportunities. We have Future Minds, and this is an 8-week innovation-focused product development training program for talent within our market to help them innovate in their own roles. We have the ICX class. This is additional capacity for innovative businesses, which has recently been increased from 2% to 5% of syndicate capacity, ensuring bright ideas at Lloyd's gets the capacity they need without having to compete for it internally. The ICX class now has over $1.3 billion in potential capacity for the market to use. Looking to the future, we have really ambitious plans. Here we're broadening our focus beyond the accelerator program and supporting innovation at different stages and scales. Further, we are launching the Lloyd's Lab Challenge program. This structured program for fast-fail testing of propositions recognizes that some of the biggest challenges faced by our customers and market cannot be solved in just 10 weeks alone. We'll be working with specific partners from the innovation ecosystem to ensure we're developing the right solutions. We are so proud of all of our alumni and their individual successes and stories. But at the Lloyd's Lab, we're also focused on driving the world of insurance forward on a more holistic level. Through fostering the power of third spaces, we're driving a cultural shift in the insurance industry, encouraging a more open, collaborative approach to insurance and innovation. The details, quite simply, are in the data. To reiterate, our alumni have collectively raised over $1 billion in funding since participating in the lab, with a 97% success rate and 85% of them having commercial relationships with some of the 100 syndicates and over 300 brokers that support us. But despite the impressive stats, it's the live evidence we get to witness day in and day out that is the real measure of our success. From the buzz of energy in the air at the start of a new cohort, to the sound of eager chatter inside the lab as people come together to meet together and dream together, to the sight of diverse minds huddled around a table exchanging ideas. Every single day in the lab is underpinned by the belief that when you bring people together in the right environment, remarkable things can happen. It's a challenge not to get drawn in by that atmosphere, and so easy to become inspired by the possibilities it presents. So to close, I encourage you to find a chair, sit back, pour yourself a cup of coffee, and close your eyes. You will swiftly realize that Edward Lloyd's coffee shop is very much alive and well.
And I'm Rosie. Thank you. That's brilliant. You have lots of questions, so I'm going to get straight to them and put in. So these are in no particular order other than the way they were posted. You've even got a round of applause from somebody down there, from Robert Bay. So the first question is, it says Syndicate Innovations, ? John Plender, writing in the FT last week, suggests that the robustness of the insurance industry's regulated capital requirements is open to question, since insurers may transfer much of the risk to reinsurers in offshore tax havens where solvency requirements can be less stringent. Do you agree?
I mean, it's a very good point, and I think everyone's always going to have their opinion on these sorts of structures, especially with Lloyd's being so unique. There isn't a structure like us, I think, anywhere else in the globe, and I think that almost kind of allows space for a lot of questioning around it. But I think, recently the PRA have said that they are going to reduce oversight on some of the managing agents operating in our market, because they are so confident in the robustness of our oversight of the managing agents in the market. And I think, as a regulator, you're not going to make that decision lightly. You are going to have to really, really believe in that decision, I think. So I think kind of looking at kind of, I guess, the signs from the regulator, I would kind of say that's a really strong sign. Reinsurance has always been a tool for our market to use. I think everyone has to have adequate capacity held on their own balance sheet or within the reinsurance balance sheet. And I don't think it necessarily kind of matters where the reinsurer is domiciled. But I mean, Mark, you might have your own view on this because you've got such a kind of rich history of working within our market.
That's the second time you've been trying to push questions at me. That's very kind of you. So a little point on that I will put in. I mean, the thing that always set Lloyd's aside was the fact that because of its chain of security with the unlimited liability, it had global trading licenses pretty much everywhere in the world, bar the US and some of the states there. So reinsurance has always been that mechanism of kind of offloading bets out and mutualizing that even further in the Lloyd's community. So there's nothing new about that. There's nothing new about the regulation. Lloyd's pulses out around the world. It pulses in from the world. So it brings risks in that a primary carrier might do domestically, but they can't get reinsurance. That will come into Lloyd's, and Lloyd's does the same the other way around. So it's an ecosystem at the end of the day. And I think much of a lot of the questions around the lab and everything else put it to the ecosystem. But I'm going to shut up because I'm not here to answer questions. I will put a couple of points across a couple of things you put in there because there's some very interesting ones coming up. But a very simple question, but I think one that could be fraught with a lot of detail. It says, how is blockchain used at Lloyd's?
So I think blockchain, we are seeing some of the companies who have come through the accelerator program, and more of the kind of insurtech innovation focused products using it. The market hasn't adopted it at scale. I think the way that we underwrite business is very kind of specialized. Anyone who goes through and gets a policy through Lloyd's has a kind of bespoke policy issued for their needs. And so and I think it's, the way that our data is kind of exchanged between client to broker to underwriter and then back through the chain, it doesn't really allow for the mass adoption of blockchain. Never say never, it might be something which could happen in the future, but I think for kind of smaller insurance policies, personal lines focused insurance policies are probably easier, but in the commercial space, it's probably a bit harder.
Yeah, and I'd agree with that. And if you look at the core technology behind it in distributed ledger technology, is the immutable truth part of it. That is being used because, again, you spoke much to the products that go through the lab, but a big other part is efficiencies and driving market efficiencies going through, and much of that is about contract certainty and putting stuff through. And blockchain technology is not blockchain itself is good for that. So again, conscious I shouldn't be putting too much into this. So if innovation labs, third spaces, are so powerful, why don't we see innovation labs in traditional bureaucratic organizations like the government or like governments?
It's a really good question, and I don't think I probably will have the definitive answer to it. I think, I mean, if you do look at innovation and supporting innovation, it's something that people with traditional mindsets or BAU mindsets, I think, find it hard to kind of understand and back. It's a very different way of thinking, and the metrics that you put on top of innovation is very different to metrics that you put on top of BAU innovation. So I think that's just kind of talking more broadly to the culture and the understanding. I think innovators, you want your innovators to think differently and be different to those who deliver BAU. For kind of the very traditional kind of, I guess, pillars of our society like government, I don't know why they don't do third spaces, but I don't think it's probably in their DNA. And I think if you look at the way governments are formed, they're not really kind of long-term bets in the sense that everyone's trying to vie for their next kind of tenure within government. So, they're operating in these kind of blocks of years cycles. And if the government was made up of the same party over a long period of time, would it be different? Who knows? But I think, interestingly, when you look at innovation, family owned companies tend to do it better because they have that long-term view and they're looking at a kind of a series of sort of generations that they want to have their company operating for. So they have that really long-termist view. So I think, it comes back to that cultural piece. You just need to be set up for a long-term vision.
No, it makes perfect sense. What did Lloyd's do before 2018 when it created the Innovation Lab?
So it was, I guess, innovation in the sense that we were moving kind of different insurances forward has always existed. The Lloyd's market is made up of essentially 50 different insurance companies, over 300 brokers. Everyone is there to serve the end customer. So within that kind of diverse pool, you are having people looking at issues in different ways. I think Lloyd's was really conscious, in the kind of 10, 20 years prior to the lab becoming an actual thing and having its own space and its inception, that it had slowed down. And so Lloyd's really wanted to put a home for innovation to happen, because with all these things, unless it's front of mind and unless it has a name and unless it has a place to happen, it can sometimes kind of get pushed back to the back of people's brains. So it was Lloyd's response to the fact that not enough innovation had been happening in recent years.
And again, I will put a comment on that one because having been around it for a long time, it was founded on entrepreneurship and innovation. It was 300 micro syndicates up till 1992. So 300 plus years of its history was already invested in it. So it's always sat in the DNA of the market. And I think you're right. It lost that when it got institutionalized. It lost a little bit of its chutzpah of what makes it different and distinctive. And I think that was it was Inga Bill, wasn't it, that brought the lab into life. And I think it was a good replay to that. And keeping up with the world, because obviously fintech and insurtech were out deep into society by that time. So, okay, next question. How do we ensure that the value chain of the London market is appropriately exposed to innovation and that the right people in positions of authority support the change activity required to ensure such innovation doesn't become a series of orphan projects?
Yeah, it's a really good question, and I think a question that a lot of people are still trying to, I guess, understand the best course of action. I think what we are doing in the lab is kind of shifting the culture, and it's putting it on people's agenda. With all these things, it needs to be a top-down approach. CEOs need to be on board, they need to be engaged. You can't really innovate successfully with someone who feels really passionate about it, who's perhaps in the middle of the organization and doesn't have the support necessarily from the top or the bottom. So, but you really do need that kind of cultural play. So in terms of kind of, can you just kind of repeat some of that question, Mark? Sorry, it's quite a long one. I just want to make sure.
Yeah, sorry, I've moved on to the next one. Sorry. Oh, there we go. So how do we ensure that the value chain of the London market is appropriately exposed to innovation and the right people in positions of authority support the change activity to ensure that the innovation doesn't become a series of orphan projects? So I guess what the question's saying is, how do you stop a great idea that's come out of the lab that's got no sponsor by senior people in the market sitting there and just kind of being left in a dusty corner and not becoming part of the ecosystem?
Yeah, so I mean, it is that cultural piece. So we are doing a big piece around trying to kind of upskill people in our market at all levels. And like I said, that CEO piece is really important. What we have seen through the lab is, when we have cohorts coming to launching, people are really ready to engage. So we now see strategies internally which are really joined up with procurement teams, legal teams. So our last cohort, cohort 12, 2 months after graduation, there were already 20 commercial contracts or commercial relationships within the Lloyd's market from the 12 companies who went through. So I think that really kind of sings to that fact that people are becoming more joined up internally. Sometimes with big kind of companies, it can be really easy to become quite siloed and different functions to, I guess, not have the same strategy kind of running through them. But I think, it is this cultural shift. There is definitely still a lot more to be done. And we are launching multiple programs looking at especially that service piece, understanding true pain points in the market and making sure we are putting the market in contact with the right service provider who can scale alongside our market. So we launched a program earlier this year purely looking at that because definitely more has to be done.
And definitely in my time, being at the lab since it opened, there was a dotted line into the Lloyd's Corporation before of where it might go somewhere. Now there's very firm penned in to the most senior levels in Lloyd's, isn't it? I mean, you've got the ear and the stakeholders absolutely at the top of the market. Okay. Would you say the Innovation Lab is an early stage VC investment vehicle for insurance products?
No, so we're really unique. We don't take any. So I am talking about the Lloyd's Lab here. Other innovation labs will take equity stake from any company who goes through their program. At the Lloyd's Lab, we don't take any equity. There is no financial backing. There is no money exchanged. In fact, what we are looking to do is provide the market with access to unique ideas, to unique propositions. And through a 10-week period, give them that kind of inside kind of relationship understanding and understanding of the product from the companies going through, where they don't actually have to engage with their procurement teams or their legal. It's an experimental environment where the only kind of thing that someone from the market has to give is a number of hours over a 10-week period. It's really kind of a low hurdle to jump across. So for what we're trying to do, our kind of measurement is kind of ideas into the market. We really care about the product. That's our kind of guiding light. Whereas other innovation labs or accelerators definitely look at it as a kind of VC sort of, or they want to back the companies who go through. For us, it very much is about product and getting those ideas into the market.
Although I think it's fair to say that the blend of the Lloyd's brand name and the scale of which it's got to, people navigating around the lab, not in the lab, definitely look at it. I mean, when you look at the funding that's come out, the £1 billion that you were talking about, that's not come by accident. There's a lot of eyes across the top of the lab. So.
I think that's a beautiful byproduct of the lab, but it's definitely not our sole purpose.
Exactly that. Yeah. What's the split between external and internal ideas that are accelerated within the lab?
So external, we have the accelerator program. We have a number of other programs focused on bringing external ideas, and it's really important that we have this because it's bringing in a diverse kind of skill set and mindset into the market. The internal piece, we've also got a number of programs centered at, but I guess it's a slower burn and it's a longer journey. So I wouldn't necessarily want to put percentages to it because you've got to start somewhere with every kind of new insurance innovation, especially when it comes to new product development. So we've, I think within the kind of programs that we have focused on internal innovation, we really want to kind of generate the idea and delivery of at least one new product, but that's not a perfect science. You want to fail things which aren't going to work. There has to be a huge amount of research into understanding these problems, making sure that we are failing things early and then moving on to the next one. So again, it comes back to kind of the mindset and measurement. Like, it's really hard to measure success sometimes in innovation when it comes to like looking at it against BAE metrics.
Okay. How many of your startups remain in the UK or leave for the US or elsewhere?
So we have companies from all around the world come through our program. So the US tends to be the second kind of territory that companies want to expand into, no matter where they have originated from. It's not always the case, but it tends to be quite a kind of well-trodden path. So those who want to base themselves out of London, we offer them workspace. So people will either relocate their businesses or set up a kind of branch in the UK and they have access to the market. But ultimately, we want to support their global growth. We don't have any kind of sway in their kind of strategy around that. But what we do is give them access to all of our offices around the world. They are able to work from those offices. They get access to our network. So wherever they want to expand to, we will then actively help. But I think, yeah, America definitely, or the US seems to be a big market that people want to expand into.
Yeah. Okay. A very specific question, which we should avoid, but the general bit at the end. I have an ongoing valid insurance claim, which is stuck in bureaucracy. Despite visible evidence of the problem damage, the insurance company insists on starting its own evaluation process, involving taking its own measurements every 6 weeks. That sounds like a subsidence claim, but anyway, whatever it might be. The dialogue with the insurers has now lasted for 15 months, still ongoing. Is this an example of something that is this an example of something that needs some Lloyd's lab innovation? I think that's exactly what the lab does exist to do, kind of efficiencies, improvements. Flood flash is a great example for Provisico, which was another flood one in there, wasn't it? Is another great example of that stuff. So
100%. And I think to kind of build on that, we're seeing a lot of kind of AI claims product coming to market to actually increase the speed. That 15-month wait period is clearly a very long wait period. And I think it is definitely ripe for innovation. And we are seeing innovations coming into the market.
Okay. Where does the £1 billion funding come from? I think you kind of answered that previously.
Yeah, so the lab is a really great signpost, or the Lloyd's lab and the Lloyd's brand. So the companies who come through the program often get, I guess, access to investors in a way that they perhaps wouldn't before. I think investors see it as a really kind of good stamp of approval. Our stats really kind of back up success. And I think, so yeah, having gone through the lab, and we take companies at any stage, but we get a lot of companies who are really early on, kind of less than 3 years old, and less than 10 employees. And they're really at that kind of, once they've really validated their idea, they can then start scaling, and scaling quite aggressively. So we've been going for over 6 years now. So I think over that period of time, it makes sense that, you know, that number isn't unsurprising, but I think ultimately we're a pretty good kind of flag to investors.
Okay. We're at time, but I am going to ask this last question, and conscious there are a lot of questions I didn't get to here, so you're going to have some homework at the end of this, Rosie. But I think this is quite an important question to close on. So many thanks for your kind insights into the development at Lloyd's. Would Lloyd's Lab consider a public-private partnership for potentially uninsurable risks? I kind of ask it because it seems to be a bit of a pathway of what the Labour administration want to do over the next 5 years.
So I think it's a really good question. I think Lloyd, so we'd have to kind of go beyond the lab. That would be very much a Lloyd's initiative. And I think Lloyd's is, and insurance is a great kind of way of leveraging, I guess, capital to make sure that people have the flexibility around them, and the kind of insurances in place to make sure that they can kind of go on and either like companies, you know, actually go and like positively impact economies, or kind of at a slightly more kind of personal level, having the protections you need. Yes, there's definitely probably scope, but that's not a Lloyd's Lab question. It's very much like a Lloyd's question. I think we have seen examples of it in the past.
Yeah. Rosie, we are at time. I barely got through half the questions. There's some really, really interesting questions in the second half. So kind of apologies to those that I didn't get to ask, but I thought it was fair to ask it in the order that people put them up in the first place. So there we go. So all that leaves me to do, we got some constant lectures coming up, coming up over the next few weeks or so. So there's just three of those that will run through to the end of the Lord Mayor's year at the beginning of November. So do dial in and watch them. So just thank yous, really. Rosie, that was brilliant. Thank you. You know, it was quite a personal one to me. So thank you for indulging me and coming along and talking to us today. I think everyone got a lot out of it, if nothing else, by the amount of questions that remained unanswered. As always, thank you to Lord Mayor Michael Manelli for creating this whole programme, Knowledge Miles. It's just been a wonderful thread through the whole of the year. We're going to push past probably 100 lectures during the year across a vast array of subjects, even just the three on the screen are an exemplar of that. So thank you, Lord Mayor, for what you've created this year. To his friends and our friends at ZN for producing the series. There was a gentleman called Lucas sitting in the background making sure everything ran this morning and got us all here on time and put in. So thank you, Lucas, for that. Oh, look, thumbs up from him. So appreciate that. Most importantly, though, to the audience, you've dialed in, you've stayed engaged. There were a lot of them on the call this morning, Rosie. You pulled a big crowd, so well done for that. And thank you for everyone coming along. So really, it just remains to wish you all a very happy rest of the week, and looking out the window, hopefully a dryish and less windy one for the week. So thank you, Rosie, once again. See you all again soon.